The Federal Reserve is currently facing internal divisions regarding monetary policy, as highlighted by recent statements from two of its board members. Governor Michelle Bowman has advocated for a potential interest rate cut in July, aligning with similar remarks made by fellow board member Christopher Waller. This comes amidst criticism from the White House, suggesting political pressure may be influencing Fed discussions. If enacted, a rate cut could signify a shift in the Fed's approach to managing economic growth and inflation, potentially leading to lower borrowing costs for consumers and businesses. Such a move could have significant implications for market sentiment and economic strategy, especially if it suggests a more accommodative monetary policy stance in response to economic uncertainties. In the automotive sector, Tesla is making headlines as it begins testing its long-promised robotaxi service in Austin, Texas. This development arrives at a crucial time for the company, which has faced challenges including declining sales and public boycotts, exacerbated by CEO Elon Musk's public disputes with political figures. The introduction of driverless taxis represents a strategic pivot aimed at capturing market share in the autonomous vehicle industry, where competitors like Waymo are already established. The success of this initiative could bolster Tesla's market position and potentially drive a recovery in its stock performance, offering a new revenue stream amid existing operational hurdles.
NVIDIA Corporation, NASDAQ NVDA, remains a significant focus for institutional investors, with Daymark Wealth Partners LLC holding it as their third largest position, despite a slight reduction of 2.6% in their holdings during the first quarter. Daymark now owns 1,045,788 shares, valued at approximately $113.34 million. Meanwhile, Citi Holding Company increased its investment by 5.7%, with holdings now at 94,977 shares valued at about $10.3 million. Other institutional investors, including Chicago Trust Company NA and Millington Financial Advisors LLC, have also increased their stakes, with Millington's holdings up by a substantial 649.9%. Overall, institutional investors own 65.27% of NVIDIA's stock, underscoring strong confidence in the company's future. NVIDIA's recent financial performance has been robust, with a 69.2% year-over-year increase in revenue, reaching $44.06 billion for the quarter. However, earnings per share (EPS) of 81 cents fell short of analysts' expectations by 6 cents. Despite this, NVIDIA achieved a strong return on equity of 105.09% and a net margin of 51.69%. The stock experienced a 1.1% decline, opening at $143.83, and has a market capitalization of $3.51 trillion, with a price-to-earnings (PE) ratio of 46.40. Indicating a relatively high valuation. Analysts maintain a moderate buy rating with a consensus price target of $173.05, reflecting optimism about NVIDIA's growth, driven by demand for its graphics and computing solutions across gaming and enterprise sectors. The stock's beta of 2.12 suggests higher sensitivity to market volatility compared to the broader market.
Entergy Corporation, NYSE, ETR, recently saw a significant reduction in holdings by Envestnet Portfolio Solutions Inc., which trimmed its stake by 20.4% during the first quarter, selling 9,657 shares. This move left Envestnet with 37,668 shares valued at approximately $3.22 million. Despite this divestment, institutional investors and hedge funds continue to own a substantial 88.07% of Entergy's stock, indicating sustained institutional interest in the utilities provider. Analyst sentiment towards Entergy remains largely positive, with several research firms adjusting their price targets. Barclays raised its target from $88 to $91, while BMO Capital Markets increased its target to $93, reflecting an outperform rating. Conversely, Morgan Stanley slightly reduced its target to $81, maintaining an equal weight rating. Entergy's stock, currently trading at around $80.99, has a consensus rating of moderate buy and an average price target of $86.25, according to MarketBeat. The company continues to demonstrate robust financial performance, with a reported earnings per share of 82 cents for the last quarter, surpassing analyst expectations. Entergy's strategic positioning and consistent dividend yield of 2.96% underscore its appeal as a stable utility sector investment.
Envestnet Portfolio Solutions, Inc. has increased its investment in Franco-Nevada Corporation, NYSE FNV, by 21.7% during the first quarter, as disclosed in a recent SEC filing. The fund now holds 13,977 shares, valued at approximately $2.2 million. This move comes amid a broader trend of increased institutional interest in Franco-Nevada, with other firms like CWA Asset Management Group LLC and TCFG Wealth Management LLC also expanding their positions. Franco-Nevada, a gold-focused royalty and streaming company, reported robust quarterly earnings on May 8, with earnings per share (EPS) of $1.07, surpassing analysts' expectations of $1. The company also announced a 43.5% year-over-year revenue increase, reaching $368.40 million. Franco-Nevada's stock performance remains strong, with a current trading price of $165.98, nearing its 52-week high of $179.99. The company's market capitalization stands at $31.98 billion, reflecting investor confidence in its business model, which focuses on precious metals and energy resources. Analysts have a generally positive outlook on Franco-Nevada, with a consensus moderate buy rating and an average price target of $169.63. The company's strategic focus on high-margin royalty and streaming agreements, combined with favorable market conditions for precious metals, positions it well for continued growth. Additionally, Franco-Nevada has declared a quarterly dividend of 38 cents per share, yielding 0.92%, which underscores its commitment to returning value to shareholders.
Johnson Investment Counsel, Inc. has reduced its stake in Simon Property Group, Inc., NYSE SPG, by 15.1% in the first quarter, according to a recent SEC filing. This move comes amid various institutional investors adjusting their positions in the real estate investment trust. Right. Despite the sell-off, Simon Property Group continues to attract institutional interest, with 93.01% of its stock owned by such investors. The company's stock opened at $157.34, with recent earnings surpassing analyst expectations at $2.95 per share against a forecasted $2.91 on revenues of $1.47 billion. Simon Property Group, a leading REIT, announced a quarterly dividend of $2.10 per share, translating to an annual yield of 5.34%. However, the dividend payout ratio stands at a high 133.76%, indicating a potential area of concern regarding the sustainability of its dividend policy. Analysts have mixed views on SPG's stock, with price targets ranging from $163 to $200, and a consensus rating of hold. The company's robust return on equity of 67.32% and a net margin of 35.98% highlight its operational efficiency, although its substantial debt-to-equity ratio of 8.29 could pose risks in a rising interest rate environment.
Envestnet Portfolio Solutions, Inc. has reduced its stake in the Cooper Companies, Inc., NASDAQ, COO, by 16.7% in the first quarter, according to a recent 13F filing with the SEC. This reduction involved selling 5,412 shares, leaving Envestnet with 26,924 shares valued at approximately $2.27 million. Despite this divestment, other institutional investors have shown varying levels of interest in Cooper Companies. Notably, IEQ Capital LLC increased its holdings by 8.7% in the fourth quarter, while Harde AP Fonden, the fourth Swedish national pension fund, raised its stake by 44.3% during the same period. Overall, institutional investors own 24.39% of Cooper Companies stock. The Cooper Companies, a major player in the medical device sector, particularly in contact lenses through its CooperVision segment, reported a modest earnings beat in its latest quarterly results. The company posted earnings per share (EPS) of 96 cents, surpassing analysts' expectations of 93 cents. Revenue for the quarter reached $1 billion, a 6.3% increase from the previous year, indicating steady growth. Despite these positive results, the stock has experienced volatility, with a notable decline from its 200-day moving average of $84.93 to a current trading price of $69.47. Analysts maintain a moderate buy consensus with an average price target of $99.70, reflecting optimism about the company's future performance despite recent fluctuations.
Tyler Technologies, Inc., NYSE has seen a reduction in stock holdings by Envestnet Portfolio Solutions, Inc., which decreased its position by 14.7% in the first quarter, according to its latest SEC filing. Despite this sell-off, several other institutional investors, including Integrated Wealth Concepts LLC and AdvisorNet Financial Inc., have slightly increased their holdings. Currently, hedge funds and institutional investors own a substantial 93.30% of Tyler Technologies stock, indicating strong institutional interest in the company despite some adjustments in holdings. Analysts have provided mixed outlooks on Tyler Technologies, with a consensus rating of moderate buy and a consensus price target of $680.50. Recent adjustments by analysts such as D.A. Davidson and Robert W. Baird have seen target prices lowered, reflecting cautious optimism. The company's stock is trading at $569.57, with a market capitalization of $24.56 billion and a P/E ratio of 85.78. Tyler Technologies has shown robust earnings performance, reporting a 10.3% revenue increase year-over-year and surpassing earnings expectations with a reported EPS of $2.78 for the last quarter. The company's strategic focus on public sector solutions, including cybersecurity and digital solutions, continues to support its growth trajectory, despite the recent insider sales by CEO H. Lynn Moore Jr. and CFO Brian K. Miller.
Envestnet Portfolio Solutions, Inc. has reduced its holdings in HP Inc., NYSE HPQ by 8.8% during the first quarter, selling 8,881 shares. As per its latest 13F filing with the SEC, this adjustment leaves Envestnet with 91,940 shares valued at approximately $2.55 million. Despite this reduction, institutional investors collectively hold 77.53% of HP's stock, indicating sustained institutional interest in the company. Other notable institutional activities include Geode Capital Management LLC's 2.3% increase in its HP holdings and Amundi's 15.9% boost, highlighting a mixed sentiment among large investors. HP's recent financial performance reveals some challenges, with its latest quarterly earnings of 71 cents per share falling short of analysts' expectations of 80 cents. This miss comes despite a year-over-year revenue increase of 3.3% to $13.22 billion, slightly above forecasts. The company's net margin stands at 4.64%, and it reported a significant negative return on equity of 244.99%, which may raise concerns about its financial efficiency. HP's stock is currently trading at $24.16, with a 12-month range between $21.21 and $39.80. Analysts have offered mixed ratings, with some downgrading the stock and others maintaining a neutral or buy stance, reflecting uncertainty about its near-term prospects. The company continues to offer a quarterly dividend, yielding 4.79% annually, which may appeal to income-focused investors.
Envestnet Portfolio Solutions, Inc. has reduced its holdings in PayPal Holdings, Inc., NASDAQ PYPL, by 18.2% during the first quarter, as per its latest 13F filing with the Securities and Exchange Commission. The fund sold 8,641 shares, bringing its total ownership to 38,907 shares valued at approximately $2.54 million. This move is part of a broader trend among institutional investors adjusting their stakes in PayPal, with entities like J. Goldman & Company LP and Exodus Point Capital Management LP significantly increasing their holdings in the previous quarter. PayPal's stock has seen a modest increase, trading up 2.2% to $70.05, although it remains below its 200-day moving average of $75.06. PayPal's recent financial performance shows a positive trajectory, with quarterly earnings surpassing analysts' expectations. The company reported earnings per share (EPS) of $1.33, beating the consensus estimate of $1.16. Despite a slight revenue shortfall, with $7.79 billion against an expected $7.84 billion. PayPal's revenue still marked a 1.2% year-over-year increase. The company's robust return on equity of 24.59% and a net margin of 14.26% reflect its strong operational efficiency. Analysts remain cautiously optimistic, with a consensus rating of hold and a target price of $83.29, indicating mixed sentiment amid fluctuating market conditions.
Sea Limited, NYSE SE, a Singapore-based internet and mobile platform company, has seen a significant reduction in its holdings by Envestnet Portfolio Solutions Inc., which decreased its stake by 41.6% in the first quarter. This move, reported in their recent SEC filing, saw Envestnet selling 17,156 shares, leaving them with 24,113 shares valued at $3.147 million. Despite this reduction, institutional investors still hold a significant portion of Sea Limited, with 59.53% of the stock owned by hedge funds and other institutional investors. The company's recent financial performance has been mixed, with its latest earnings report showing a 65 cents EPS, missing the consensus estimate of 93 cents. However, revenue for the quarter was up 29.6% year-over-year, reaching $4.84 billion. Analysts have varied opinions on the stock, with ratings ranging from strong buy to neutral, and a consensus price target of $147.15. The company's diverse operations in digital entertainment, e-commerce, and digital financial services continue to position it as a significant player in the Southeast Asian market, although its high P/E ratio of 108.09 and recent earnings miss may raise concerns about its valuation and growth prospects.